I'm Matt Bichard here in New York City for NAREIT's REIT Week, the 2018 Investor Conference. Joining me today is Drew Alexander, President and CEO of Weingarten Realty Investors. Drew, thanks so much for joining us.
My pleasure.
Now, obviously there's no shortage of news about all the challenges facing many retailers right now. How much exposure does Weingarten have to tenant bankruptcies? And flipping that around, what sort of opportunities can that present to a landlord?
So I think it's a great question. There is a lot of retail in the news. I think Weingarten prides itself on having the most diversified, top tenant list in the space, which I think at the end of the day is the best comfort for investors. Retailers change. We deal with retailers all the time who have great financials when we do the deal, then they do a leverage buyout and things change. So diversification is the number one thing. The other thing that's really important is the quality of location, because even through bankruptcy, a good location will prevail. So to your point, we have 4 Toys R Us stores. We'll release, 3 of them rather comfortably, and then the 4th one is a great opportunity at a shopping center in the Kendall area of Miami, where we actually paid money to the bankruptcy court to buy the location back, and we will likely tear that down and do something, very, very dramatic. Whether we do a 1-story retail, a drugstore, and maybe a fast fooder, or we do something high-rise. There's a big hospital next door. We have to figure that out, but it's a great opportunity, that came out of that. So we have a very manageable watch list and are, very comfortable with where the supply-demand is in retail these days.
Now, Weingarten sold 8 shopping centers in this past first quarter. What was the strategy behind those dispositions, and do you expect to see more acquisitions or dispositions as we go the rest of the year?
So the world is ever changing. Back in 2016, we bought about $500 million of property in really about the first 8 months of 2016. And then the narrative started to change, and all of a sudden, really, people started getting worried about retail because all of a sudden they felt there was too much space and the internet, millennials shop differently. And I say all of a sudden because, point of fact, those things existed for a long time. The narrative changed. So we pivoted in the fall of 16 and through 16 and 17, and as you observed, thus far in 18, we've sold a lot of property. So we'll keep looking at acquisitions. We're working on a number of things. We certainly have the capital to do things, but the pricing that we're seeing for good quality properties is very, very aggressive. And at the same time, our stock is at a nice discount to its NAV. One way to deal with the risks of the watch list tenants in a lot of cases is to sell the center. So as you observe, we've sold a lot of centers, and my guess is we will continue to, through the rest of the year. And again, if we can sell the lower quarter of the portfolio at about NAV when the stock is at a big discount to NAV, that just has to be a good thing for shareholders long term.
And lastly, can you touch upon your development and redevelopment pipeline and how these projects will enhance the company's portfolio?
So we're doing a number of different things that are really exciting. We've got a number of basic redevelopments underway, adding floater buildings, repositioning centers, and really hitting lots of good singles there. And then we've got several exciting, much larger redevelopments and new development projects. So, our company runs in the southern and western United States, basically from Washington State to Washington, D.C. And in the Seattle area, we're finishing up a mixed-use project where we own the retail ground floor, and Lennar owns residential above us. It's anchored by Whole Foods. It'll be one of the first Whole Foods that opens under the Amazon administration. And then in Virginia, near Washington, D.C., we've got 2 mixed-use projects anchored by Harris Teeter. In those cases, the residential is on our balance sheet. We'll likely sell it a couple of years after those projects stabilize. And then at the River Oaks Center in Houston, which is our flagship, the 3rd oldest shopping center, anywhere, we're adding our first residential tower. I think we'll do more, but we're, actively working on and starting the actual construction of a 30-story luxury residential that'll make this location a real work, live, play, 24-hour mixed-use project. So lots of exciting, small, little, simple redevelopments, some really exciting, bigger ones that serve to both make value for shareholders and also sort of cast the portfolio in a new light with some mixed-use projects. That's, very much what people want today.
Great. Drew, thank you so much for joining us.
My pleasure.
For more from NAREIT's REIT Week, be sure to visit NAREIT's website, REIT.com.